The S&P 500 clawed its way back and finished the week green year to date. In this week's video, we'll review the latest charts and data to help us understand what it means. We'll be in blitz mode, so feel free to use the pause button on your video player. Bullish transition in 2002, 2003. Bullish transition after the major low in 2009. This is how the same chart looked approximately a year ago on January 6, 2023. This is the much improved look a year later approximately on Thursday, January 10th, 2024. This chart also dates back approximately 1 year and was covered in a video. Told us to keep an open mind about better than expected outcomes when things didn't look particularly good on December 30th, 2022. The much improved version on January 12th, 2024. If you know economic and stock market history, you know things unraveled quickly walking forward from August of 2008. There's a look of an economic data set over a 1 year period. It's the same data set, also 1 year, that we covered in early 2023. How does the same chart look today? Is it concerning like this? It is not. It looks significantly better. Look at the point-to-point slope of the line on the data set in early 2024. This really doesn't look anything like this. We made the same point approximately a year ago looking at non-farm payrolls. This is a 1 year look back in August of 2008. It looks significantly better approximately a year ago in January of 2023. If we fast forward 1 year to early January 2024, once again, this really doesn't look anything like this. Covered it in January 2023, told us to keep an open mind about better than expected outcomes. If we fast forward to January 12th, 2024, a much improved look. May 23rd, 2023, we needed to see some improvement. As of January 11th, 2024, we've seen significant improvement. The chart that we covered in early May 2023, it's dated May 4th, 2023. We've got an indecisive look and a much more friendly and improved look January 12th, 2024. The longer a market goes sideways, the bigger the move we can expect to get when we either get a bullish breakout or bearish breakdown. This is the keep an open mind about better than expected outcomes look that we covered in early to mid-November. Same chart holding the breakout on January 12th, 2024. NASDAQ weekly cloud significantly improved relative to the look down here in Q1 2023, checking all of the bullish boxes on January 12th, 2024. Physical commodities speaks to decreasing concerns about inflation and higher interest rates. January 12th, 2024 still has some work to do to clear this level here. Encouraging look on the longer-term monthly chart with TSI, the True Strength Index, and PPO, both getting bullish crosses. Black above red, black above red. Green above price, yes. Price above red, yes. Blue above red, yes. Price above the cloud, yes. As the cloud flipped from red to green, yes. Smaller version of the chart dated January 11th, some significant progress, but still some work to do in this area here. Rate of change looks like the constructive period after the major low in 2003, after the major low in 2009. Similar look today. Present day here, above an upward sloping 200-week moving average, really doesn't look anything like this failed look in 2008. Zoomed in version says we're holding a bullish breakout above this base. Unlike the Dow Composite Average, the Dow Jones Industrial Average has cleared this level here from early 2022. January 10th, checking all of the bullish boxes in the weekly cloud. Very constructive long-term look, NASDAQ 100 on the monthly cloud. This was the keep an open mind look that we covered in early November. Similar look mid-November on the weekly cloud, checking all of the bullish boxes on January 10th. Which simply speaks to the probability of good things happening relative to the probability of bad things happening, looking out weeks, months, and years. Prices above the moving average cluster, the fastest moving average, blue, is on top. Slopes are up, and for now, we're holding the breakout above this base, January 12th, 2024. Longer term, significant improvement on the NYSE Composites monthly cloud January 12th, 2024. Also have an improved look with momentum here and here. NYSE new highs minus new lows. Needed to see it improve. This is the November 1st look. It did improve. The chart that we covered in June of 2023, it was a constructive look for the economy and semiconductors. But look at the same chart today. Semiconductors have moved higher. And for now, this looks like a bullish breakout above this base, a bullish breakout above this high. And thus far, we're holding those levels. All of it occurring above an upward sloping 200-week moving average in red. S&P 500 financial sector, constructive consolidation above this extremely important region here dating back to 2007. You can see we're also holding the bullish breakout on January 12th when we zoom in. Not particularly encouraging on November 1st of last year. Significantly improved on January 12th, 2024. And notice the vulnerable look here in October of last year. The leadership group tech during that pullback looked healthier and has since gone on to exceed this high. Covered this topic in detail in June 1st article on Seeking Alpha. You can find it by Googling the title on your screen. These charts, concerning looking charts, don't look anything like the bullish breakout that we saw in May of last year, the pullback that occurred above this base, and then the fact that we've gone on to make a new high above this high as of January 12, 2024. 1 year ago, chart dated January 12, 2023, covered it in a January 2023 video, has work to do from a longer-term perspective. Covered this version June 29th, 2023. It had completed a lot of that work, and it was constructive for the longer-term outlook. In a year removed from the January 12, 2023 chart, checking all of the bullish boxes. Also a constructive tight look with the moving averages, with blue the fastest moving average, the 50-day on top, price above all of the moving averages. This looks significantly different relative to this here in Q1 of 2022. Checking all of the bullish boxes in the monthly cloud, January 12th, 2024, S&P 500. You can compare and contrast the present day look to these bearish periods and these bullish periods. You can compare the present day to these bullish turns in the 1950s and 1960s. And you can compare the present day to the bearish turn in February of 2001 and July of 2008. 1988, constructive. 82, constructive. Within the context of a secular bull market. A little bit of a scare here, but maintaining a constructive look from a longer-term trend perspective. S&P 500 weekly, 30, 40, 50-week moving averages. All of this occurred above an upward sloping 200-week moving average in red, January 10th, 2024. June of 2022, late April, early May 2023. Present day, January 12th, 2024. Rates are at least taking a break near a logical region. This is new lows, new highs for all of the major U.S. indices. Much improved. This is the keep an open mind look that we covered in early November, chart dated November 1st, 2023. This version dated January 12th, 2024. Weekly cloud October 26, 2023, just a few short weeks ago, checking 0 bullish boxes. A significantly better look from a probability perspective on January 12, 2024. Chart on your screen, we covered it over a year ago. It's dated December 12, 2023. We said this favorable look after the major low in 2009. The only other time that we saw it was here in 2023. If we fast forward to 2024, we still have a constructive look. BIL underperformed XLK, the technology sector ETF, by 4.11% this week. Covered this chart in June of 2023. It's a good sign when you're laggards, and global stocks are laggards relative to the U.S. It's a good sign when they're participating and improving. This look here looks significantly better than the look back here in 2022. Here's the same much improved look on January 12th, 2024. Speaks to inflation expectations, Fed expectations, interest rate expectations. Better looking than we've seen in quite some time. AGG, a diversified basket of bonds. Same, this looks significantly different message from BSV, using price and moving averages, chart dated January 12, 2024. A basket of physical commodities, DBC in the ETF world relative to VU, the S&P 500 ETF. Commodities versus stocks, it's a weekly chart. It goes back to 2015. This also speaks to improving expectations relative to inflation, interest rates, and Fed policy. We've been holding this constructive breakout for 1, 2, 3, 4, 5, 6 weeks. Longer above, more meaningful it becomes. It's told us to keep an open mind about better than expected outcomes for quite some time. It still does. Let's take a few steps back and see what we can learn from the CCM secular volatility model. It's fairly easy on this chart to see the markets shift in terms of risk appetite. And from a financial and emotional perspective, a figure like this can be extremely painful. Thus, it's fair to ask and answer, how does the exact same S&P 500 monthly chart look today? The answer is quite a bit more constructive, January 11th, 2024. Similar concepts, different settings. This looks discernibly different from this, which can be helpful in terms of understanding probabilities. How does this chart look in January of 2024? Does it have a rollover look like this? It does not. It has an ongoing improvement look relative to the October 2022 low. Similar concepts, different settings. Another way of saying that, different time frames, different sensitivity. Constructive, constructive, constructive. Migration to concerning. This is the look of the chart here in Q4 of 2022. Then the much improved look in Q1 of 2023 here, similar to this look here in 2009 and this look here in 2003. How does the exact same chart look on January 11th, 2024? If we fast forward, still has a constructive look with price above an upward sloping moving average envelope. If we take a much broader look at these concepts, using the secular volatility score as of January 12th, we learn a lot about the market's vulnerability on January 12th, 2024. We all know that really good things can happen within the context of a secular trend, but we also know, especially in periods that feature interest rate volatility, that we have to have realistic expectations about 100% normal and to be expected pullbacks and givebacks that occur between any point A and point B that could be several years down the road. I have to be careful about these bullet points down here on the lower portion of your screen. The concepts that we've been covering help us better understand the market's risk-reward profile between a point A and a point B that could be several years down the road. If we were to look at the same S&P 500 chart with the same settings, how does it look today? Confidence-inspiring or concerning? It's a much improved look on January 11th, 2024, relative to where we were even in Q1 of 2023. Things look good on January 12th, 2024, especially from a longer-term perspective. But we all know, if we're going to use any of this effectively, it's incredibly important that we head into next week and every week with that flexible, unbiased, and open mind. The material in this video has no regard to the specific investment objectives, financial situation, or particular needs of any viewer. This video is presented solely for informational purposes and is not to be construed as a solicitation or an offer to buy or sell any securities or any related financial instruments, nor should any of its content be taken as investment advice. Any opinions expressed in this video are subject to change without notice, and Shavaco Capital Management, LLC, or CCM, is not under any obligation to update or keep current the information contained herein. CCM and its respective officers and associates or clients may have an interest in the securities or derivatives of any entities referred to in this material. CCM accepts no liability whatsoever for any loss or damage of any kind arising out of the use of all or any part of this material. We recommend that you consult with a licensed and qualified professional before making any investment decision.